All right, welcome everybody. We are back to the weekly Proflex macro call. So I think it's been a very interesting market as we were discussing right before we started recording. We are back to, I would say, reverse to the mean as we were calling. Like we had an overreaction to tariff. We were expecting that there will be some kind of rollback, and as it happened over a few weeks, it took longer. But I think market has given us some of the I think one of the biggest rally, and we will share some data around it. So to be frank, I think this has been kind of always the markets always surprises you, even though it may be we can talk about how we were already predicting. If you remember, I think last time we talked about was that the worst case support was in. We had a pretty good bounce from there, and let's dig into short term. Means we had one of the biggest streak of wins in S&P 500. In fact, I was looking at some data people are sharing. This seems to be the longest, number of days when S&P 500 has been in green since 2004. So we are talking about 9 days of back-to-back gains, which is great. And also, not just that, we have the amount of gain is actually highest. Even if you look at the winning streak, all of them, all the way up to 1930, this seems to be the fastest. Gain in S&P 500. So, which is very interesting, I would say. It also shows you that the market had overreacted, and we are coming back to reverse to the mean, as we can call it. Having said that, means that's where the things become interesting. Like as you know, if you means we have been talking about it that the worst is behind us and things are going to turn positive from here. If you are the All Access subscriber, we have been taking a lot of trades. We booked it this week, which we took during March and April, many of them. So this was an easy part of the market, I would say, once the market was down, because it's our market always overreacts and prices in the worst first. And with the way Trump is always, as they talk, means they proudly talk about the art of the deal and all that. Basically, his style is also go the worst case first. So I think that was the easy part. We have been discussing week after week in this call that how this was kind of, it's bound to reverse. How far, of course, nobody knows how fast it reverses, how far it goes. But I would say now we are back to a state where we are through with the overreaction. If you see the chart on the Nasdaq is very similar. In fact, we ended up testing 200-day moving average today. Now, why 200-day moving average is important in both these cases is as this is the parameter we have always discussed, which is what we call as a reverse to the mean. We were always like in a very bullish scenario where we were not even testing 200-day moving average for a very long time. We did test it even before this whole mess of tariff started, if you see, with the concerns around what the tariff will entail. And after, I would say, right before April 2nd, we were again in this indecision mode. If you see both on Nasdaq and S&P 500. So what the whole 1 month of to and fro tariff has given us is that we are back to that mean. Now is where the tough part starts, where market has to now decide what is the long-term bullish or bearish narrative. So that's how I read this market today. I mean, I think just to repeat again, we have been talking about how this was an overreaction, how this is an opportunity. I think now definitely it makes sense if you have increased your allocation, if you had taken some excess trades, it's a great time to book some profits or start hedging those positions. That's how I would see it, because we are not out of the woods, because as we have always talked about that these 200 moving averages are technically very crucial. They also tell you the trends. And previously, even before this April 2 happened, we had already got a rejection from 200 moving average on both Nasdaq and S&P 500. What are the other parameters? I think when we look at what will decide market direction, we will take a little bit dig into the earnings and specifically what happened last week or last 2 weeks. But let's first look at the other picture, and that is the bond yields, which is we always talk about how they are one of the very important part of signals. And if you see, that also heavily correlates with a lot of data which is coming in. Like, for example, we got jobs data today, which was very good. And that actually created some concern in the bond market. And this we had a huge spike in the long-term yields and 10-year yield. The reason being very simple. And let's look at some of this data. So what is happening? First of all, we were in a uh, environment where people were already starting to price in that we will have some sort of a economic growth slowness and some kind of impact to the economy. And there was a 100 basis point rate cut, which was being starting to get priced in. Now, what happened now is that we are now resetting those expectations as we are seeing that the impact is minimal. On the other hand, but we still have three rate cuts on the table as per the market. On the other hand, the inflation expectations are have been increasing ever since the this whole tariff drama has started. So Fed is in a tough situation. Now, if you see, everybody was expecting May, definitely there won't be any rate cut, which is the upcoming meeting. June was the first when people were expecting the first next rate cut. And after today's data, what we saw is why the yields are jumping is that market is now going back to no rate cuts in June and probably waiting for the second half of the year for the rate cuts. So this is, I think, one factor which is kind of creating a little bit of a concerns in the bond market. And this is the first time we are seeing in last few, like ever since the bottom has been formed in stock market, the first time we are seeing where there's a big jump. On the other hand, it's still not concerning, I would say, till we hit 4.4, 4.5% mark. Around then, if we make a high in this bond yields, then we will start worrying about it. So this is one data to keep looking at. What also we saw in last few days is that yen carry trade has been working, in our favor, where the yen is devaluing, which gives us better situation on the leverage here for the Japanese money. So I think all these factors are pointing to a great situation on and the equity trade. But the biggest part, which again we go back to, and we had looked at it last week or a couple of weeks back also, is the money supply. So we talked about the stimulus all across the world, and you are seeing that the money supply is continuously growing in last 3 to 4 months. So this is what is driving a lot of asset classes. Of course, stock market react day to day, but we have seen the gold bull run. Of course, it's taking a breather because money is flowing back into equity. But if you see gold itself, it's not like it's still a significantly good bull run, and it's just a pullback. We had a similar pullback in early April. We had a similar pullback multiple times through this bull run. So I would not be worried yet. And I think around 3150 or so is a good support where worst case, but I think we are seeing already some good support forming for gold. But I think this is the benefit of, where's the money going? We are seeing Bitcoin breaking out. We did talk about this. I think last 2 weeks back, we talked about how it is broken out of the downtrend. And now I think it's it's like one of the best asset classes which are through this last couple of months of turmoil, and we are seeing it almost touching 100K now. So this is what I think the fundamentals are telling us, that risk assets are back, even the all kind of asset classes, because of the money supply. We did discuss it a few times in these calls. Going back to tech stocks, I think, and why QQQ is doing better than the S&P 500, I think that is very clear, and that has happened mostly in last few days, where we have seen the earnings being pretty solid. Means, except for, of course, Apple, which has shown some concern on tariffs, and I think which is the worst hit Mag 7 stock in tariffs because of they rely on actual hardware being shipped, especially their dependency on China. And I would say if you go and look at the hyperscalers, the earnings are great. They are talking very positively. They are talking about no change in capex. Means I think the biggest concern for the AI trade was that whether there will be some cut on capex with uncertainty. And in fact, Meta has raised their capex, which is one of the, I think, and remember, they are not even hyperscaler. They are not even providing cloud services. It is for their own internal use. So that's the confidence we are seeing in Meta for AI trade. We are seeing, Amazon and Google reiterating that they're continuing with their existing plans. And we also saw Microsoft means, have you ever seen Microsoft jumping 8% in a day and 10% in 2 days? This is one of the, I would say, best results of how earnings is impacting stock market. Like these are some of the impact of how market had overreacted without seeing the actual on the ground changes yet. And I understand that people have been talking about that this is the last quarter earning, tariff impact will come in future. But in reality, if you see, where are we on tariff? Let's talk about that. Basically, what we are talking about is we are all the April 2 drama is over. Those were already rolled back for everybody. Only thing which was remaining is China. China and US both are already rolling back. Even before the talks are starting, they are rolling back tariffs on each other. So it was a kind of a grandstanding. It was a test of, we did, superpowers. We did talk about how US and China are entering into a bipolar world. So that is another factor we have to keep in mind. This is going to happen. China and US will keep fighting forever. But that market is now learning that this is not new. This is something which was bound to happen. Now the question is, what is the actual impact of tariff? At this moment, comments from Amazon, comments from Microsoft, all of them are saying there is nothing substantial yet. But again, it's a uncertainty, as we are calling it, which is the premium which is built into the market. And now, as we discussed at the start of this call, what is the real impact, how the trade deals are done, how the news flow from here, that will define whether we are able to break out of 200 moving average, or we spend more time consolidating. So that is the overall view on the market. We can take some questions here or comments. Feel free to add your thoughts here. So I think few things I would like to highlight here is that we have been discussing on this call the, like, what are the macros to watch out. I hope that as we discussed just now, you're also able to see why we focus on data rather than the headlines. So that is one thing I would like you to also look at and focus on and ask questions around, because ultimately how you make decisions in investing, you will always see overreactions in the market, because a lot of investing is sentiment driven. And what we saw in early April and what we saw, all the panic, and also not just sentiment. Let's also, means, I know we are basically oversimplifying it. What happens is, there's a, even if you look at hedge funds, if you look at bigger funds, they are also heavily leveraged. So when there is a reaction which is sentiment driven, the market usually overreacts for two reasons. Not because they are not smart enough. It's because when the leverage gets hit with a big move, they end up getting liquidated. And those are the opportunities as a retail investor you can grab and you can actually invest in. Remember that in a big move, there will always be over leveraged people, because in a steady state, most of the hedge funds, they take pride in how they are able to leverage to a very high level and generate higher returns. And when that leverage starts crashing, and as you may have heard that around that time, even the treasury market was impacted when the basis trade was unraveling. Uh, that gave us such an overreaction in that week that created a bottom pretty quickly. And that also, as we discussed 2 weeks back, that also coincided with one of the very good technical support level. This is why we were confident that that is kind of a short-term bottom. And we have been talking about that for some time now. So I think this is how we have been able to make decisions. We have been able to, guide people, retail investors, and so on. We have been able to help achieve better returns just by filtering that noise and going and taking decisions based on data rather than, and also always be ready for these kind of scenarios where there will be overreactions in the market. So that is what I think we dealt with. Now I think what happens from here is I think we have very good discussions even in our WhatsApp group, that some people are concerned, I think, because for good reasons, I would say, because in reality, no progress has been made. There is no real, we don't know the future yet. We don't know what is the actual tariffs will look like. I think we have seen some announcements on trade deals being made. Like, for example, they are talking about India, they are talking about Japan. We are very close to making deals. They have already announced the framework. We did talk about it last week also. I think the biggest positive which market has taken in last 2-3 days is where China has quietly started reducing tariffs on, means basically whatever the retaliatory tariff they had put. They are now coming to a place where they are ready to talk. One more thing I think which I was looking at was the data around China exports falling, and I think they were, as you can see, right, they are getting hit more, which was the expectation from the market even at that time point. And that is where I think everybody was expecting the negotiation to start sooner, And that, because of the grandstanding on both sides, that yes, we are the superpower and we are not going to bend down, I think it just lasted longer. I think that's what created additional volatility. On the other hand, I would say I think I was looking at one of the chart from Bank of America, which was talking about the market anxiety is still high, um, even though it's way lower than, I don't know how they measure it, but they call it as a stress indicator. Let me just share that quickly again. So that is the stress indicator they've been talking about. And this had peaked around that early April. But even though it's come down significantly, but it's way higher than where, the steady state. So again, these are the kind of things I think we are talking about resolving. But what we are seeing here is that this was in all the data points, if you look at all kind of indicators which all these investment bankers are setting up, ultimately all of them are pointing to overreaction, which I think we had been capitalizing on, and we have been talking about capitalizing on in last few weeks. All right, so that is where we are. I think we have no questions right now. So feel free to let us know if you have any comments.
Yeah, so maybe slightly different. Can you hear me?
Yes, I can. Go ahead.
Yeah, so I'm sure everyone is anticipating there will be some what do you call response from India on that bombing front, right? In India, do you
Hmm.
anticipate market will react because this can have implication? Like even like Apple, for example, China is supplier now they're moving to India. Do you think there will be some spike either way or some like
Hmm.
market reacts for no reason sometimes? So do you think it will happen?
Sure. So I think if you're talking from Indian market perspective, I
Not
have a
Indian,
different
US
answer. From
market.
a
How
from a
US
US
market?
market. Yeah.
Yeah.
So from a US market perspective, I would say there are two reasons where there is almost zero chance of any reaction. One is that US is never directly ever involved. Like if you look at Israel and Gaza war, US is much more involved in other wars. India, Pakistan, US has only been involved in arms supply, and very, very quietly. They have never been involved. Second part is that India itself has taken a route of, they want to do it in a more, as they call it, like because we are also investing heavily in India, so we do study the India macro. So they talk a cold start strategy. So India is never, like, even the last few escalations, India has taken, they call it as a, where they will go do some kind of surgical strike, some kind of a very, very specific targeted approach, rather than
No, no,
initiating any
sorry.
kind of a war.
Yeah, no, I'm not. I was thinking more of a. See, even Bassett, he's the Treasury Secretary, right? So he was saying today, like apparently for all the holiday season, orders starts going now for China, for example, right? So if they
Mhm.
don't negotiate, those orders will not go, right? So where they're planning to go, India, because a lot of clothes manufacturing happens in India, right? All the
Okay.
stitching and all. Do
So,
you
okay.
see that
So,
that angle is the business impact, like certain
yeah,
things,
so I think
whatever?
one thing we need to understand is India means we are not expecting whatever happens. Okay, so the question was about the potential conflict at a in a from a, some kind of a war situation between India and Pakistan. Uh, what I'm trying to highlight here is, first of all, India is a very big country in terms of like business impact. Even when we had the biggest wars in India, the impact is very limited to a few states which are not very industrial. Like if you look at, I mean, they're more agricultural. Like if you look at most of the border states, they are not part of a big part of our economy in terms of export driven or anything. So, and plus, I think India exports to US are so tiny that US markets will never even, bother about it. Like even though we are talking about India taking manufacturing share from China, the share of Indian economy is so small for US that it doesn't even matter. So economic impact is going to be, I think, from a US perspective, people are not even discussing. People are not. If you look at the US financial news, they have not even mentioned more than like a very, very much a footnote of what is happening there. It's unlike anything like a Russia-Ukraine war. It's unlike Israel and Gaza and all that, because in these places, US is much more involved. This is much more. I would say US is much more aware of this, even from a sentimental perspective. Even if you look at Trump's comment, it was such a useless comment where he was talking about, oh, it's a 1,000-year war. What does it even mean? Pakistan did not even exist, before 1947. So it's like it shows how less involved US is in this kind of a conflict. So I don't think so. To answer your question, I think it will be too far fetched to think of any kind of market impact. I think we are probably more following this news and we are thinking about it as a big deal because it's very specific to India. But on the other hand, from a US market perspective, it's not even a news. Even if I would say, even if a big war break out, which is a very low chance, I would say that US markets will hardly care about it. That is my take on it, unless China gets involved or something, and I don't think that is ever a strategy which India would use either, where there is a big war initiated. And that's where I was trying to say, even from an Indian market perspective, if you see Indian markets have been doing all right, even in the scenario where there is something expected there. Even there, the theory is that India has taken the cold start approach, which is basically doing specific targeted attacks rather than initiating a full army mobilization. So that is what I think is my take on this conflict from an economic perspective.
Okay.
And coming back to, I think the whole India migrating, China manufacturing or any kind of thing moving to in from to you India from China. I think what we are seeing is it's more of a long-term narrative if India can build. I think iPhones, yes, that's a one big news, but that is the reason being uh, uh, Apple has been working on it for many years. It's not a new thing. They have not just moved it now. It was started 3 years ago, where they already were manufacturing quite a bit. And when you say manufacturing, it was purely assembly plant. It's not even almost 200 components are still imported from China for the assembly when India is assembling. The only thing which India is making fully in-house is the box, the cardboard box where iPhone ships in. So there's nothing else India is making other than purely assembly and a few screws here and there. Nothing high tech is being manufactured in India. So this is more of again a very political thing where they will get routed through India. There will be some tariff benefits because US and China are in a trade war, and you need to understand that none of these supply chains are getting changed heavily. I think even in the WhatsApp group we had shared this whole very good FT, the Financial Times visual, where how the supply chain of iPhone is so closely tied to China, where it's not about the final assembly, but individual components. They all come from various parts of China. So I don't think any of those things are going to change. And this is exactly the reason what we are seeing is it's more of a political war. It's more of a testing out your superpower. Neither US can get away from China in terms of relying on them, nor China can get away from US in terms of having US as a customer. Because as we saw the news that in April their net exports came down by 10%, and they are an export driven economy. Their GDP is going to be totally devastated if they are not making a deal with US right now. So all this is probably going to be resolved in next 2-3 months from a very broad perspective, because we are not expecting trade deals to be finalized, but at least the exemptions and everything will be aligned. And just like we had a 90-day pause on this tariffs, our expectation is that all these things will be resolved over a period of 1 quarter. And if you see, the bigger news for iPhone is, I would say, what happened with the Epic court case. I would say the biggest negative news for Apple is that versus all the China issues, because what happened, I don't know, people are not even talking enough about it, and I'm seeing it as one of the big issue. Now the court has decided that they cannot charge this 30%. And if you see, Apple is now not even giving a guidance on their service revenue, because it will be a big impact to their service revenue in short term. Of course, they have said that they will appeal and this decision of the court, and with the kind of money they throw on this legal cases, I'm sure they can get some. There's a potential win there for Apple in future, but for now, I think the bigger issue for somebody like Apple is less about the tariff or India versus China. It's a bigger issue is how they are getting, the antitrust cases. Even another side of the thing is that where Google and Apple agreement on the search and the search revenue, that is also being fought in the court, and that is also not going well for Apple. So I would say all these things are much bigger issue even before the tariff came in. So I think that is one thing which, if you are an investor into Apple, you have to worry about. But I think even the comparison when it came between India and China, I think one of the analyst firm had done it is that there is hardly 2% cost difference on Apple to be manufactured in India versus China. So that is what we are seeing right now. Um, all right. So any other questions? I think that was a good discussion, though. I would say if you want to look into the future of, what will be the impact of this trade war on whether the real manufacturing will move into India or some other places. But I would say I was reading through because usually we don't analyze it, but a lot of investment bankers are now analyzing the supply chains. Like even if you look at Nike or some of the other companies, even Starbucks made a comment about it. Almost all these companies are actually declaring how much of their goods are made in China. So it's very interesting to see that many of these big brands are already diversifying and they have a fast path. So they are smart. They have been aware, and this is not what Trump started. Let's also understand. I have been talking about it many times that the whole China-US trade conflict is almost 6 to 7 year old. It started in Trump's first term. It was further increased under Biden's term when they created a lot of they actually increased tariffs. They did create more and more constraints on China. So it's just the style of how Trump takes head on versus diplomatic and slow escalation, which was the Democrat Party's method. I would say that is only different, but the trends were very clear. So companies were already investing into other supply chains like Vietnam. I think Vietnam has been a great winner, where India has lost out in last 5 to 6 years. I mean, Vietnam has gained so much more manufacturing diversification, which from China, which India has not. Other than, of course, the iPhone is a big headline where India has won. But I think we now the question would be whether India can take this opportunity further. Now there is more pressure on US brands, and I think that will be a very good discussion, because even Vietnam is now saturated with how much they can take on. So I think these are the things to discuss, I think, in long run, but and specifically the companies which have moved ahead of time, they are going to benefit because US China trade war is not going away for, this is the probably a full next century Cold War. It's not, means it just like we used to read in books and movies and all about US and Russia conflict in, 70s and 60s and all. I think that's what we are entering, and we have already entered 5 years ago. It's just that we are realizing it now as Trump is taking it, to the next level.
So another question, if you follow Google front, right? There are some court cases going on splitting them and all. How you see Google
Mhm.
working for Google that?
Yeah, so I think that's what I'm saying. These are the bigger issues, but Google has a less of a concern for two reasons. Yeah, Google is mostly facing antitrust issues, and they don't have any revenue impact because there is nobody who can, there is no alternate for search or any of these things. So the best case, or sorry, let me put it worst case. The worst case scenario of Google is they'll be asked to, divest some of these businesses, and it will not be actually net negative because imagine if they are asked to divest some of these, they will probably become separate companies, and it will almost be like a unlocking of value for shareholders where these will be individually priced. But net, even when means there is no real benefit of these. These are mostly procedural things. Means we have never seen in a modern world in last 20 years any bigger action like that being taken by the courts. So I think these court cases will keep going. I think the bigger impact on Apple of that Epic case is because they were immediately asked to stop charging on their app stores or their, the revenue share of 30%. So those kind of things have a bigger impact versus what Google is seeing. Because for Google's case, there is no alternative. They cannot be asked to, not take customers on search or anything like that. So I would say the antitrust issues are bigger for um, Apple right now versus Google. But I think yes, there are some negative sentiment attached to it as the news comes in. I would say those will be still hanging around on Google, and I think that also shows in the valuation. If you see, Google is probably one of the most undervalued Mag 7, and that is one of the reasons that they are facing this, because of these headlines always uh, against them in terms of the antitrust. But I would say most of the benefits of where Google comes from is their monopoly in search and all that. So I don't think that's going away soon. While definitely they have to show. I think the bigger issue is not antitrust for Google. I would say Google's biggest issue is whether they can win an AI race. And at this moment, it looks like they are doing good on the cloud, while they are catching up on some of the end user features on their apps. So yeah, and I think these are all interesting things, but not yet changing the investment thesis in these companies. And I don't think they will be. I mean, they're already priced in to a certain extent, I would say. While Apple, I would say the news has been very negative to me, like at least that is my view, both on the court cases front and on the tariff front. But most of the other Mac 7, I would say these things have been going on for years. And market is very well aware, and they are already priced in the risks of those. Right. So any other questions? I think we are seeing pretty much we have covered what we wanted to talk about. But feel free to ask any other questions if you have in your mind. Especially, I think we have been through most of the earning season, and I think, of course, the big one on the AI is still pending, which is the Nvidia, which comes pretty late. But I think other than that, we have seen mostly solid earnings, which is, I would say, a great sign in the near term. I would say if you talk about specific stocks, and I think that is one of the reasons why market continued to rally, even though it was mostly a technical bounce initially, and then we started seeing all these tariff reversal, China talks. But I think if we did not have good earnings, that could have all fizzled out. So now there is optimism building up because of earnings, and if now imagine that we had talked about last quarter was anyway not impacted by tariff. This quarter, nobody is slowing down as per their earning comments, while they are all kind of uncertain. They're talking about, some kind of caution. Now, if any big frameworks are announced around earnings, sorry, around tariffs, then it will people will start looking for a quarter, even if there is a real impact in Q2. My assumption is that people will start focusing on the future, right? Means just like people were focused on the future in early April when they got concerned and market tanked because of tariff. So I would say, again, I will just repeat that ultimately from here, if the optimism on the trade talks continue, and if other things which we have been highlighting for some time, like we talked about the income tax cuts which Trump administration is promising, they're talking about deregulation. There are a lot of other positives which are probably still yet to play out in the market. So that can determine the market direction. And technically, we already talked about that we are again at a decision point around 200-day moving average. So that will be crucial. Um, so I think this is where we see from here, and we
Can I
can.
ask one question? Sorry, I'm driving if it is not clear.
Yeah, please go ahead.
Yeah, for the NVIDIA, right, there are two headwinds. One is the more stringent now scrutiny on what they can export, especially to China. And the second is Huawei, making their own AI chips. It may not be on par, but it's a matter of time, right? It's just an engineering
Mhm.
issue to solve. So what do you think? The revenue eventually and the profit margins will come down?
Sure. No, that's a good question. So let me put it this way. NVIDIA China business is definitely hurt, and market has already priced it in. In fact, they have already announced it ahead of time that they will be taking a one-time hit of that. But on the other hand, we did discuss that there is no lack of demand. Ultimately, their biggest customers are always hyperscalers in US, and the biggest investments in AI space is still happening in US. And the highest priced and highest margin chips were still in US. Now, to answer the first question, yes, there is some impact because China was either through indirectly through Singapore or other places. China was still consuming a big chunk of NVIDIA supply. But that was only on the lower end of the margin, I would say. So margin impact will be minimal because they would have actually better margins because their existing customers who are still expanding, who are still buying their latest and greatest Blackwell, and they are committing to next generation, they are not slowing down. So yes, I think there will be some impact this quarter. We will hear. I think that will be crucial to see how they guide next quarter. But for this quarter, the news is already out, so mostly market has already taken the hit for that. The second part, when you say Huawei catching up, so means I always say that whatever news comes out of China, claiming performance on anything means you have to take it with a pinch of salt. You don't know how much of the overstatement is there. Even if when you looked at DeepSeek, it created a big news cycle around that time. But then you realize that you need to distill the models built by US companies, then only DeepSeek is useful, and they will always be running behind a few months to US companies, and they're not innovating, they're just reducing price, they're just optimizing. So similar things are happening. I think definitely they will, means when you have a need, China will invent, and Huawei and all, they are catching up. But second part is, even if let's assume that they are very close to the performance, there is no way Western companies or US hyperscalers will start, taking Huawei instead of NVIDIA. And forget about Huawei. I think even AMD, which is not very far from, in terms of the GPU capacity and performance and so on, even they are struggling to sell as much, and NVIDIA is leading. So there's a lot of factors here, which is not, one thing is, of course, question, we can question whether they are really there. They might be there on performance, but are they there in power efficiency, because they are not on the latest process nodes? The second part is, even who would trust Chinese semiconductor? And third part is, where US companies will not be even allowed. Means there will always, because now the semiconductor is seen as a national security thing, and nobody's going to allow Chinese semiconductor to be imported into US and so on. So I don't think we have to worry about Huawei's thing, other than, of course, that definitely there are challenges on China market to grow for NVIDIA. So that's the only thing which came out of it. And that has been the case for last, I would say, 3 or 4 years. Means every time there is some news coming out of China, even during Biden administration last year, they had blocked the higher end of NVIDIA chip to China. So they just keep changing what you can sell to China. I'm sure NVIDIA will come up with something further in export compliance, and they will start shipping to China again. So that is my take on it. But I would say it's not a deal breaker. And as you can see, I think NVIDIA is already struggling. Means from the optimism of all the spending, we are already down. So I think that China thing is priced in into the stock price. Then let me quickly take a few questions on the chat. So I see one of the question is whether we have talked about the long-term bond yields. So I would say we did discuss it. So let me say, we can look at the recording, but basically we talked about the issue around, what happened with the data recently, and Powell's dilemma about, the inflation expectations are high. So he's holding on the rate cuts, and while the, Trump administration wanted him to cut. And I think last week also we covered the silent QE, which Besant is doing. So my take is that yes, the rate cuts are not going to happen quickly in the current environment. In fact, we did talk about now there are 3 rate cuts priced in versus 4, which was the case a few weeks back. Also, now the probability based on the interest rate futures for the June rate cut, which was the earliest market was predicting, is also going down today. So probably we will not see a rate cut till June at least, but in fact, it can be much later than June in the second half this year. And what I would say the Trump administration can do, we have talked about it a few times. They have a lot of tools. If you see, they have not increased their borrowing. So they have increased their buybacks of the longer term illiquid bonds. So there's a lot of things which they are doing to control the yield. And at the start of the call, we also talked about that, yes, the yields are shooting up today, but till we again go back above 4.5% on 10-year, I'm not too worried. So for the equity, I would say the biggest issue will be when we start hitting above 4.5% again. Quick few questions on the chat again. Any thoughts on any crypto other than BTC? I think I have said it a few times now here, and I would repeat it again that I don't see any reason to consider other cryptos outside Bitcoin. The only reason why means I've been in crypto domain, by the way, for a very long time. So I'm talking about from the history of ICOs in 2017 to all the NFT craze and all kind of, fancy tokens I have seen. I have been invested into them. I used to believe in them. But let me put it this way. In today's world, if you're an investor, unless you're developing on blockchain, you don't need to worry about other tokens. Because as an investor, the only reason people used to invest in those altcoins was for getting higher returns than Bitcoin because they are more volatile, and in a bull market, they used to give you higher return. But if you look at the risk adjusted return of those tokens, they have been way lower than Bitcoin. They haven't been actually decimated in last few months, even when we have a pro crypto administration. Second part is if you want to accelerate your return on top of Bitcoin, and if you are more aggressive in your investing approach, there are now tools available like iBet. There are options available where you can create your own leverage. There are products like MicroStrategy. There are products like, there are so many Bitcoin-based products which are safer to build leverage on to even create, higher velocity performance over Bitcoin. That you don't have to touch altcoins or other crypto. So that is what I have been repeating multiple times. I think it's means being from that industry where I have spent a lot of time in blockchain. I still believe in use cases of them, but as an investor, I don't think one should invest into those. Then next is can they go to EU where they're selling networking device? I'm not sure it is with the context of it. If you are referring to, are you referring to the Huawei opportunity? That's what I believe the question is about. So I would say yes, Europe and China are kind of causing up. They are seen as one of the, that is, I think, the biggest deal which everybody is watching. And I would say EU and EU is our countries are also split. There some are more left versus some are more right. If you see somebody like Italy, we are seeing them aligning more with US, while we are seeing other countries who are aligning more with China. So it's going to be interesting from a business perspective. I think the trade deals and what kind of terms, because what I'm seeing is US is seeing it as a trade war with China. Means it's not when US is discussing a trade deal with EU, they are going to put terms on what they can do with China. That's what I'm expecting. So either EU will align with US and they will accept the same kind of restriction on China. Otherwise, US is not going to do any deal with EU. That's my expectation. So again, we don't know where they will align because EU is split between which superpower to back because they are economically heavily dependent on China. While from a defense perspective, from a strategic perspective, they have always been aligned with US. So, yeah, but yeah, it's a good topic to discuss, I think, from a geopolitics perspective, to try to figure out what will happen on these kind of, at a specific company level, whether Huawei chips or NVIDIA chips will be taken in EU. I would say, by the way, one more thing which I forgot to talk about in NVIDIA is when we talked about why AMD is not able to make a dent into NVIDIA chips is not only because of the power efficiency or anything, it's also because of the CUDA and the software stickiness. So now again, going back to the same question for EU, means if they have already started investing heavily into NVIDIA infrastructure, can they migrate to something else? I don't know yet. So I think those kind of things we have to see how it plays out. So I think these are not something which we will see changing anytime soon because nobody changes their decision so fast. But I think if EU countries decide to take a bigger picture view of aligning more with China than US in a bipolar world, and they do not accept US restrictions on China, then I think definitely there is a challenge there where Chinese companies will try to capture more and more of the market. And that is, I think, the future we have to look at. And it will be political. I think it's very clear from most of the, if you look at Trump administration or even before that, I think politics is involved in every deal. We have seen semiconductor world, we are seeing for last 10 years, even something like, when Broadcom tried to buy Qualcomm that Trump had canceled it in last term. There have been many decisions taken at a government level where they are not allowing, trading to be done, not allowing the acquisitions to happen in this space. So I don't think this will be out of politics, and it will be part of the negotiated trade deals, because this is also anyway part of the export control is a very well defined kind of a regulatory thing in US. So I don't think technology can just move around that Huawei can take over US allies market easily. That's my take on this point, if you are referring to the NVIDIA semiconductor market and how the Huawei will compete. But yeah, I think these are good comments and good questions. I think we can take a few more. I think we have 10 minutes, but if you want to discuss these. But I would say the good things now is that we are back to steady state where we are talking about a trade deal rather than a trade war. And yes, there is uncertainty, but I think it will not be resolved quickly. We had talked about earlier that if you have to make new highs, we need to resolve them, and that may only happen maybe later in this year. But at this moment, I think the trade opportunities do present. Like you can see this as a tradable time rather than buy and hold time. I would say look at hedging if you have made some quick gains, try to hedge them. If you are over leveraged, now that we have had such a good streak of 13% gains in 9 sessions, which is one of the fastest growth in S&P 500, you can expect a pullback. So look for managing your portfolio, look for how you go and de-risk yourself for a short-term drawdowns. That is my take right now, how you should think as an investor. Of course, as I said, we have been talking about for last 2 weeks that the worst is behind us. But now that worst, which we have already seen, is also way lower than where we are today. So earlier when we said worst is behind us, it was easy decision to buy. Now, because the bottom is way down, if we correct again by 5, 6, 8%, that will not be pretty for your portfolio. So this is why I'm talking about think about hedging, think about creating those play out the scenarios. Investing on hope is the worst way of investing. Invest with a plan, and let us know what you're thinking about it and how you want to structure. I think we did do and again, I'll keep repeating that options is a good way to do that. I'm glad that after our last options workshop, there are a few discussions are happening already in our WhatsApp group for how you guys are doing option trades and so on. So it's one thing I would highlight is that these are great tools. You should use them to hedge yourself or to create better strategies, because just buying stock and holding is sometimes becomes a hope game that you're just hoping that they go up. And in an uncertain time like today, it's very difficult. Means the easiest, of course, you can do is just sit on it for long term, and as we say, that stocks only go up in long term. But you can definitely accelerate your return, and the compounding works better if you are able to generate short term better yield than the market. You are able to generate much bigger impact on your 10 years or 20 years returns. That is one thing which we always talk about. So do pay attention to that, and that's our goal, to teach and educate people as part of this group. All right, so if there are no other questions, we can call it a day, and thanks everyone for joining. It was a great discussion. Have a great weekend, and looking forward to these discussions in future. Thank you. Bye-bye.